All right, let's get the microphone check out of the way here. Let me know if you can hear me across the various chats that are going on right now. We've got quite a few, including YouTube. So if you are over in YouTube, go ahead and let me know if you can hear me okay. And we're going to get rolling here very shortly. All right, looks like microphone check was good. So we're going to get ready to get rolling here in just a few seconds. Let's go ahead and get the music under control. And we're going to roll right into our Macro Monday live stream. All right. Let's do this and this. And we're just going to roll right into it. Hello and welcome to Macro Mondays here on Landy's Crypto Corner. I am your host, Landy, and we are going to be looking at the longer term timeframes today and weave that into our daily analysis. We're going to cover Bitcoin. We'll look at Dixie. We'll look at gold and traditional markets. And we will also be revisiting the proper way to do a volume map, as it is based on trend and trend breaks, and that's when you reverse the places that you mark for high volume. So we will revisit that near the end of the stream. So stick around if you want to see that and learn how to do volume mapping in the correct way, and at least the way that I show you, so that you can match the charts. You can take liberty and position this stuff the way you would like, but you really do, if you really do want to keep up with what I'm showing, then I do suggest that you stick around for that later. Here we are looking at Bitcoin on the weekly, and this is the Bitcoin in 60 seconds charts. So if you are a subscriber to the channel, or if you've run across one of my short videos, you'll see that just about every day I do a Bitcoin in 60 seconds video. It is a short video, so it can get buried quickly. Go ahead and turn on notifications so that you don't miss those. But in yesterday's video, we pointed out that we had a nice move up and close above the upper first standard deviation of the Bollinger Bands on the weekly time frame, and that was positioned at around $30,000, closed like $10 up from there. And it did test this close open structure over here from about mid-April, and that was at 30,300. The next big test to the upside was this close open here at around $30,600. So I had mentioned above there, I'd be looking for Bitcoin to test this wick high at around 31. And then the next big test would be somewhere around 31.5. And we can see that today's wick high, and of course the current weekly's wick high, is now around 31.4. So we may be getting that test fairly quickly of this wick high over here. In fact, you could probably raise that to, because this wick high is actually 31.4, fell just shy of that. And then the next wick high before getting to the daily, weekly, and monthly overhead resistance is going to be 31.525. And then, of course, we have the wick high over here at 31.862, right into this daily, weekly, and monthly resistance overhead at that 31.8 area that we had been, kind of hunting since it first breached $30,000 back in April, came all the way back down and wicked into that 24,750 low, and then drove right back up to this ever important area. Now, if Bitcoin does test up in here, note that the upper second standard deviation, which typically acts as either a reversal or a continuation area, meaning closing above it, we're looking for the subsequent weeklies to, continue up at least on a wick basis, to test higher if it does close above, and or a reverse off a reversal rather off of the upper second standard deviation, much like what we saw to the downside here. Move into it, a swing of the low, might see some of that as well. And then, this in this case, it was a lower low and then a reversal off of that zone. So that is something to pay attention to if price reaches up to this 31.8 to this daily above at 32.4. Above there, I do think it's pretty clear sailing, probably to around $33,000. I don't have a specific level marked for you on that, but I would say somewhere around 33. And then the next big area to look for is this weekly at 34,750 to the monthly overhead at around $35,000. So that is the big one above this 31.8 level to pay attention to. That's going to be that 35,000 after 31.8 rather. Now, Bitcoin is still looking very good on this move as long as it is staying above, especially the upper first here, which is coming in at 30,160 right now. But below there, as long as Bitcoin can maintain the basis around 28,300 to the weekly here at 28K, looking pretty good to keep testing up further. And quite frankly, if that area does fall apart, I would be looking for a move right back to this closing higher low, which is right there at the monthly at 27.2. But as long as Bitcoin is above this upper first standard deviation and this wick low, which is currently at 26,500, so it matches that lower first standard deviation, then this move is intact. It is an uptrend with a trend break, especially well, it'd be a trend break above the weekly at 28K, but especially above on any closures, this 30,600. So keep an eye on that. If we do see lower term time frame pullbacks that lead into a daily that start to break down towards this basis, just remember that week over week, it will move up as long as Bitcoin is above it. That is a 20 simple. That is the basis band of the Bollinger Bands. And then we, quite frankly, we look for this area to keep getting tested and, or, if it's not tested already, to get tested. So the weekly is also pivoted at 26,282 now. Now this is a little bit of a different look because Bitcoin moved up so quickly from yesterday's recording, from the close open. It was at $26,000. That has now moved up to 26,282. Of course, this is above the last higher low wick. So this would still be, we would still have a very good edge on what's going on in the market. Should Bitcoin fall through that area, then it's likely this pivot will then move to the highs. In this case, as long as it's above that pivot, it's above this last higher low, we're looking higher. So that is going to be kind of the read on the weekly. Now we do have a monthly close coming in. So we're going to shift over to a different chart for the monthly. We're going to turn off volume because that's a little annoying to look at. All right, we'll look at volume later when we do our volume map. Now, when looking at the monthly, we can see that the basis band is down here at 26,340 or so. You can kind of give it a range. It's around 26.2 to 26.4, depending on where price is trading, as it does oscillate a little bit on the time frames in between closes. Now, that is due to the nature of the way that Bollinger Band standard deviations work. Now, in this case, we can see that anytime you see a closure above the basis, which is what we got last month, it was more that price held sideways and the basis came under and it opened above the basis. And in this case, that gives us the bias that price will test somewhere around the upper first standard deviation. And this just happens to be coming in at 33,260 or so, 265 there. Now, that is the next logical area on this particular close open from September into October. And then, of course, if we do see a breach above that area, then we look to our support resistance level. We've got that $35,000 area that we just spoke about. The next area above there would be this 38,500. And of course, above there, the upper second standard deviation, which is just about in line with this $40,000 wick high. So above that area, we start to see expansion on the monthly, and then we start to target the highs because we've already, at that point, if Bitcoin is closing above those areas, especially this upper second standard deviation, and we see expansion, we're above all the lows at that point. We start targeting the highs here at 45,000 to the wick high. Well, technically, you've got 45,000 to 47,000. So the two closes up here. So 45 and then 47 on this particular close open from August to September of 2021. And then we look to the wick highs here at 48,200. And then we start picking out the wicks again. Just above there, we've got 53,000. And then the close open at 58, and the higher high close open at 61,343. So that, of course, if we're seeing price trade up there, we're looking for the high to get ran at around that $69,000 even. So looks good so far. We got to see where the monthly closes, of course. But as long as it is above the basis band, we are looking for it to move up somewhere around the upper first standard deviation, which is currently, pivoted on support and resistance between, this 31.8 to 32.4 area. If it doesn't get there before the monthly close, then, if we see the close come in, this is likely going to be where the upper first falls, is in that 31.8 to 32.4 area, as it is pivoted just about $1,000 above 32.4. They're at 33,200. It's a little less than $1,000. So I would expect it to move down if Bitcoin doesn't reach it first. So keep an eye on that. We are also going to turn off Bollinger Bands and just reference our monthly map real quick for support and resistance. They did move the, just so you guys know, if you're using TradingView, they moved the object tree window, or the object tree toggle to the sidebar now. So it's directly under the data window now. And the data window is pretty handy, by the way. If you haven't checked it, you should. It gives you the stats on your indicators. So if there's something that's difficult to see, you can always look at the data window and it's listed out for you there, especially if you're using RSI with divergences. Let's go ahead and look at the monthly support and resistance zones. And we can see that I've called out the major swings, so we'll throw on a swing indicator here. I've called out the closes, and the closes are coming in that orange color, that kind of burnt orange color. And then I call out the closed zones with that color as well. And then the wicks are all in the dashed yellow line. So you can see that Bitcoin is really in between two major close opens on the monthly here. And that's this monthly support down here at 23.3. There is another monthly now, so we can update this. And the wick low came in right there at the monthly wick lows that we already had marked there at around that 25.2 region. And in this case, you can see between 23.3 and this close up here at $35,000 is where Bitcoin is kind of playing around now. And we can update this to have the close here from the most recent monthly. And that is going to be, you know what we'll do? Instead of doing that, because I'm going to end up messing up all the colors here, let's go ahead and see if I can pick out the right thing here. Give me a moment. Yes. Watching someone suffer through, you're the one suffering through watching me do this. My apologies. So we are going to increase this close open zone a bit here. And we've got the two swings there already captured. So now we're essentially playing in the $26,000 to $35,000 range between these monthly closes. And that, of course, does not mean that we don't look at the wick highs here. There is the wick highs and the wick lows. If you want to take the most recent wick high, that's at 31.8. I have the breakdown candle marked from the daily, monthly area on the Bitcoin in 60 seconds chart. That is why the 31.8 is marked there. It is not marked here because it is not a swing. It's a breakdown support resistance area that falls on a daily, weekly, and monthly. That's this area right here, this yellow line over top. It's daily, weekly, and monthly support and resistance. And when you look at the monthly, I'm simply marking the close open here because there is a lot of confluence with the closes on the daily, weekly, and monthly. And when you have 3 time frames like that all closed on this at the same time, it's a very, very big area. But for the swing chart and swing map, it's not really as relevant because we're looking at closing swing highs and swing lows. And in this case, if you'd like, you can mark the wicks here and the close open here on the highs of the current move up. Just note that this is all mean reversion from the move down. And, in this case, we already marked this low. Do we really need to mark this area? I would venture to say probably not. And then you can see where that 32,933 or $33,000 wick low is coming in. You can see that we're above these wick lows over here. If we can breach this close open right here, the next big monthly area is that wick at $33,000. So now I really won't map out the swing chart too much differently. Yes, we do have an extra. We've got this area here, which is not from, this is the close open high over here, which was this swing. And then we've got one extra from this particular move. And the reason why is because if this does get a trend break above, now we have a new trend forming on the monthly. In this case, we had a downtrend to a trend break, a bit of a trend break. You could call this swing a trend break here. We've got a higher low, higher high, higher low, but I like to take the closes in this case. So when this candle, if this candle, I should say, breaches this most recent high at 31,862, then I will start mapping just this particular swing chart move separately. I will still keep this map, but I'll map this separately in terms of swings. All right, so I think that pretty much covers the macro here. The big areas to look for to the upside are breaching 31.8, then look to 32.4 to $33,000, and then from there $35,000. Above there, it's looking pretty good to at least test up to 38 to 40. All right. Now, I am going to go back to the weekly here, and I'm going to address something that you're going to see a lot. I'm seeing it a lot myself. We've got the monthly swing chart here. We can keep this on here because you can see price action pretty clearly. And what I have been seeing is that this particular pattern from the lows to this particular move is a Wyckoff distribution. I'm not going to pull up all the schematics and show them to you, but I will do this instead. I'm going to simply refer you to volume. The volume pattern does not match either a Wyckoff accumulation through phase D and E, and it also does not map a weekly Wyckoff distribution. Where you might see distribution is on the daily. All right, so this is where you might see distribution, but it would be a daily time frame distribution and likely headed back to some of this downside support again for a retest. That's a longer accumulation. So I really would not be entertaining those who are looking too deeply into Wyckoff distribution or accumulation on the weekly, as I do think that this is a different pattern that's playing out. Now, that doesn't mean that things won't play out in a similar manner. So there are many different ways to map out Wyckoff accumulation and distribution, but the volume signatures just don't match, to be quite honest. The declining volume and then the high spike on the lows, great. And then the declining volume, the high spike to get us out of the lows to this most recent major low at that monthly at around that 19.5. All good through there, but the top is not painting the distribution signals that you would want to see. Now, it could still. Also, the length of time that it's taken is not the correct amount of time. Just to kind of refer you to, we had a very short, so Bitcoin doesn't have to respect the time is what I'm going to tell you now. Is if we look back here, and we can get rid of the monthly here, as we are looking back to the Wyckoff reaccumulation schematic that matched the bottom here in May to June and July of 2021. You can see that many here, because of the same kind of signatures, we had a very short accumulation period of just a couple months. We had a move out of that accumulation, hit the spring, and then moved up into what looked like a daily distribution. Okay, you had the lower lows, we had the spikes so that we had 3 drives at the highs, we had the breakdown to a lower low, lower high, lower low, and you're looking for distribution once you get past the spring. Yes, you're going to hear a lot of different ways to look at this. I'm doing this very simply so I don't have to pull up a schematic and go through Wyckoff. But in this case, I had noted at the time that this can't be distribution, because this would have to be Wyckoff hitting this, a Wyckoff reaccumulation, hit the spring and go, and then a retest of the breakout. Because the length of time that we had for the accumulation to distribution was matching a move back to the breakout area. That's exactly what we saw, and then new highs. And then the wider schematic was a distribution schematic. We just had a reaccumulation, a bit of a Wyckoff pattern that played out very, very closely, to be quite honest, in terms of a Wyckoff reaccumulation inside of this big top, which was actually a Wyckoff distribution. We are not seeing that same pattern going on right now here in terms of volume, in terms of length of time. Maybe if Bitcoin was to fail this downside area at 24.9, then, and especially this wick low at 24,750, then we see this 19.5 get tested. But I still wouldn't be looking for a full distribution structure that passes this low. That's what a lot of Wyckoff distribution guys are looking at right now. They're looking at look, it's a weekly, it's a daily, it's all painting distribution. And as soon as we pass, 24,700, we're going to hit these highs, we're going to reject, and then we're going to pass 24,750 or whatever to the downside. It's going to rip through 19.5 and take out the lows and lower. And then that's where they're getting their $8,000 to $12,000 calls. They got a range basically between $8,000, $10,000, and $12,000. And look, they have a case, but their case doesn't match in terms of time, doesn't match in terms of volume. And if this was going to paint a daily distribution, I'd be looking for somewhere around $19,500 to $20,000, to be quite honest. And I do think that's wishful thinking. When looking back at the weekly here again, when looking at this, we can see that the weekly is pivoted at 26,200. Now, of course, that is going to update quite aggressively at the end of this week, but I'm not looking down until I see the last low taken out, and then we can start entertaining, failures, larger ranges, possible distribution on the daily that could eventually lead to the weekly, but it's going to take a lot longer than I think anyone would expect, even looking at Wyckoff. If you guys do want me to go through the Wyckoff schematics, let me know and I'll pull them up for Wednesday's live stream. I did want to touch on that because that narrative is everywhere right now. It's accumulation, it's Wyckoff reaccumulation, everything's going to moon now, or it's Wyckoff distribution, everything. Look, accumulation and distribution look very similar to each other on the schematics. There's little details that are criteria that must be met in order for them to be one or the other. And there's also volume criteria and time period criteria. And right now we are not there yet in either case. We are looking at, in my opinion, a different pattern playing out in terms of accumulation. All right. So I think I pretty much nailed my thoughts on that. If anybody has any questions, let me know in the various streams, and I will try to get to them later. All right, so let's go ahead and go back to our daily Bollinger Bands here. And I do want to note that as long as Bitcoin is closing above the upper second standard deviation, we're going to see very aggressive expansion of the Bollinger Bands, implying that Bitcoin is going to continue in this direction, close over close. At minimum, if we see a closure above, we're looking for wicks around the current close open structure and or high and higher. And in this case, the upper second standard deviation on the daily is at 30,500. So if we do see a daily close above there, BBWP is going to continue to get expansion. It's at 86 over 76. And we can look at this in a charted format. This is a free indicator. It's just built into the Landy bands. Thank you very much I just blanked, and I know exactly who he is. Oh God. Oh no. Anyway, man, I really messed that one up. Caretaker. Sorry, Caretaker. But thank you for allowing me to use your code. I did contact him, and it is built into the Landy Bands indicator. You can, by the way, get it for free. It's in the link in the description of just about every video. And it is a private indicator. It's not paid. It's just not released and publicly searchable, as I'm still working on it. All right. In this case, you can see that BBWP is well up over the moving average and, likely headed up a bit further here and more aggressive as this continues to get that aggressive expansion. Now, even when we see BBWP cool down and Bitcoin start to put in a high and or a consolidation that breaks below the upper second and upper first, we will continue to get expansion as long as Bitcoin is above the basis, trading and closing above the basis band. So in this case, that would imply that the move is more likely to continue in that upside direction. And of course, as I had noted on the weekly, that prior low at 26,500 is the area to watch on the weekly. And we can see that Bitcoin can come all the way down to the lower first and still maintain the integrity of this upside move in terms of structure. And that is at 26,991. So basically $27,000. Also a big important weekly level there. And of course, the basis is coming in at 28,160 and likely to update pretty aggressively. It's right around this prior low wick here at that 28,100 area. So looking good for further upside on the daily and more aggressive upside to run the highs up here. It's already basically getting there. It ran the close open almost. What was the close open? 31,471. What was the wick high here? 31,397. So, just about running this close open of the actual high of the year. And then it's only got a little bit more to get to the wick high there at 31,862. So, all right. We will go through some of the lower term timeframes when we do our volume map. And we will take a look at Dixie right now. So you could probably hear my microphone moving around. My apologies. Let's go ahead and take a look at Dixie. There it is. There's the lower highs. All right, so a little bit of a consolidation, pushing the low now on Dixie here. Let's go ahead and look at momentum. And we'll get rid of this for a moment. Yeah, down below 106.19. Okay, so good. We see that it is in either a continuation or reversal area, right? That's that lower second standard deviation, just so happens to match this wick low area at 105.53. And that does mean if Dixie is going to reverse, it is going to do one of two things, rather. It's either going to hold this low and bounce off that lower second and try further up to get past that up the lower 106 area, which would also be back above this support resistance level. Or we're going to see it grind down, close below that wick low, and continue to grind that lower second standard deviation down to this 105 region, possibly that 104.69 area. So the other alternative to this is we did see a squeeze on the Bollinger Band. So it's either going to grind them down and or it's going to start closing below the lower second standard deviation. Also, that would be closing below this wick low. And that lower second standard deviation is 105.52. So if it does close below there, then we'll see more aggressive expansion to the downside here. This is not quite ready yet for like a daily expansion down. So I would be aware of bounces on Dixie in and around this low to that 105, possibly 104.69 area. You can even take this high on the way back down, and that's going to be slightly below the lower second standard deviation at 105.38 to 40. Below there, then we start looking at 105 even, and then breaching into the upper 104 area. So that's going to be my daily look on this. And again, we'll come back to this on Wednesday. If it does start getting below that upper first, and of course coming into Friday's closure, if it closes below it, then we can start looking possibly past this upper 104 area to the basis on the weekly, and that's coming in at 103.82 to 104, down to 103.5. That'd be the next big area to watch to the downside, especially coming into Wednesday. We'll check on it, but especially coming into the Friday closure, if we see it's below that upper first on the weekly, and that's coming in at 105.72. And the weekly is going to be pointed to the downside with the momentum pivot all the way up there at 107.10. So if we do see a pump in Dixie, watch that 107 region around the highs again. And especially on the close up here, which was 106.67, because even if we don't see that pivot hit to the upside and or closed above, if you see a closure above this close open at that deep 106 area, then it's likely going to run the highs again around the upper second standard deviation and the mid 107s to 108 up here by that overhead resistance. So something to keep an eye on this week. So far, so good. Looking like it possibly wants to show a little bit of downside or a little bit more downside here. Now, longer term, by the way, I'm not too keen to be looking too much further than the overall lows that it's put in thus far this year. We have that beautiful move back up on gold. And gold is well above the upper first standard deviation here. That is coming in at 1940. Yep, my eyes aren't what they used to be, but 1940. I had to lean over and look all the way over at that screen. Got too many screens. As long as it's above there, it's looking good. That puts it above this last lower high. And, you know, you're going to hear a lot of like, oh, well, if it breaks down from 1942, it's all over for this move. And quite frankly, this is a nice move that is creating a structural change. So we have that the downtrending structure is now a trend break structure. And we're looking for, you know, higher lows to come off of this particular high area if it doesn't continue to keep pushing up. In the meantime, it can still spike up around its current high by the upper second standard deviation at 1990 to 2K, maybe even a little bit more. What did it get on this wick, actually? That was 1997. So it can still play around in this area up here. But if it does head down to 1940, don't be surprised. And as long as it's above this daily order block close open area at 1932, it's looking pretty darn good. Little bit more dangerous for a bigger downside move if we start to see 1908 get taken out. Now, obviously, that's a pretty big return to the mean anyway. So I would just be looking for more after that, down to around 1900 to 1890, and possibly even where the basis is coming in at 1885, 1886 area. That'd be a really big mean reversion, or revert back to the mean, if you will. And you know, it would get a lot of people pretty bearish, but I would not be surprised to see higher lows if it did breach those areas as well. It's still in higher low territory all the way down to the preferable area at the lower first, and that's at 1833. And then of course, the 1810 low down there on the wick. As long as it's above there for right now, until we see structure built on a candle close higher low that actually has some wicks and is not, or shadows if you like, then, the big area to watch to the downside, upper first, 1940 to the wick low here at 1908. Big area. I'd be looking for a low to be put in there if it does head that way. And then, of course, if it breaks down, we look for the other criteria to be met. 1983 is going to be the momentum pivot. It's currently trading at 1977. Now that's on the daily. What I'd expect is something like a bullish reset, like what we got on Bitcoin on the daily. And in this case, weekly's up above 1882. So again, that downside criteria on the daily, it's got a big range. This was an aggressive move up. So getting some nasty mean reversion, not out of the question. Now, for the integrity of the move, to be quite honest, you do want to see it above around that 1930 high here, which also happens to be where that order block is. So just keep that in mind. Otherwise, it's given up a lot in terms of volatility. And then also it would be, it'd be below the upper first here at 1960, which then gives us the bias that it's going to go test the basis around that 1920 to 30 area. So, and that's, of course, from the weekly. When looking at traditional markets, they're not doing quite as well as gold and Bitcoin. They did come back and test their lows. We were expecting this. This wasn't anything that we didn't talk about. And now, of course, we saw the expansion down. And then what do I like to see? I say this every time. Maintain the trend to the downside. In this case, reject the upper first. It could have even gotten to the upper second, and it doesn't do anything because the highs are all the way up here. It did get a higher high than this open over here. So you technically have a bit of a trend break, so it could do a higher low in this case, but I like, expansion to the downside, expanding that lower second standard deviation, get your mean reversion, and then come back and retest. And that's exactly what we're seeing right now. And so far, we're seeing a nice bounce off that lower second standard deviation. So back above 33,225 or so, today's wick high. Go figure, at the lower first standard deviation. Then I'd be looking for the opens over here at around 33,365 to the basis at around 33,500. Of course, above there, the upper first, which is at 33,800 or so. Possibly another retest of this 33,900 to $34,000 at the highs. But, I'm not too enamored with the structure because if it does break down, we do see that Stochas pointed to the downside below basically 34,000. That does mean that if Dow breaks down and starts closing candles below the lower second standard deviation, doesn't mean it can't get in there and swing the lows over here at 32,850 or so. But if it does start closing below, we're going to see more aggressive re-expansion of the Bollinger Bands to the downside. And that would look like, especially if it starts closing below this low at 32,850 area, then we got to start looking at this low over here on a close at around 32,750 to 60 to the actual wick low there. And that's coming in at 32,580. So I'd give it room to swing it at around 32,500 to 32,600 or so. Now, that is, the logical progression, of course, if this is going to be, or not be, but remain bearish and then also get re-expansion to the downside. But I kind of favor those expansion to contraction rather, to retest and then bounce, and then we gauge it from there. So we are seeing the possibilities showing themselves for a bounce today. And then we'll come back to it on Wednesday and follow up. This is also a big area for reversals on the weekly, which is the lower second standard deviation. Now, to be fair, this does not rule out a test of the current wick low at 32,850 because the lower second is currently at 32,877, and it is getting expansion to the downside, but a lot of this is still residual expansion catching up from this high to low spike. So the fast move up from the lower second standard deviation to the upper second and now back to the lower second. And again, traditional markets like to reverse off these areas more often than not, but I still wouldn't rule out a test of this wick low there at that 32.5 area. So just watch it. We'll follow up with it on Wednesday. Let's go look at NASDAQ. NASDAQ, not quite as nasty looking. You'll see here on the weekly. We can get rid of this meme trend line that I was just using as a bit of a joke, but it actually, it lined up with horizontal support and resistance and worked out okay. We see that we have a bit of a range here on NASDAQ in terms of the Bollinger Band look. We see that the prior low was already ran in the open of this weekly candle. So in this case, we saw the prior low ran and the lower second standard deviation get hit, and then nice bounce in those lower term timeframes. And on the weekly, all the way up to the lower first standard deviation on the weekly here at 14,750 or so, just above that 14,700 support resistance zone that we've had marked on the chart for a very, very long time. Now, of course, above there on the weekly, we're looking to the basis band, which is still slightly pointed up, but it is flattening at 15,000 to 15,100. When looking at the daily, you can see that lower low got ran. This is also the lower second standard deviation on the daily, but I will note that the 15,100 is the momentum pivot on the daily, which is not looking great for the bulls. But if they can put in a low, you can ignore that momentum pivot for a little bit. So that would mean, basically trading back above this wick high at 14,781 and then closing there. We'd see a low put in, bounce off the lower second. We're then looking to like 14,900 to 14,900 to 15,000 rather. And then from there, the upper first at around 15,100. And that's currently where this daily momentum pivot is. Now, of course, that's going to continue to the downside. So this will update probably to like, 14,900 to 15,000 by close today, especially if NASDAQ can maintain this move and close above the lower first standard deviation of the Bollinger Bands. We can see that we have a neutral stance on volatility because it is just playing within a range between the lower second and upper second standard deviations currently. And, I would be looking for this bounce to follow through a little bit more if it can close above that lower first today. That is coming in at 14,640 or so. That's this guy right here. And then especially above 14,700. When looking at SPY, we can see that it ran the low. Did it hit our 415 target? No, missed it. 417. And we were looking 415, 420 again. It ran 420, got a nice bounce off the lower second. One thing I will caution is, again, just like Dow, we are seeing expansion again of the Bollinger Bands to the downside. We'll give it some room. Maybe we'll get that 410 to 415 target. But, as long as it's trading back above 420 here, this wick low, and it's looking good to try to bounce. If it does get above the wick high here at 426.54 on a close in tomorrow's candle, or maybe even today, we'll have a technical low set coming off the lower second standard deviation where it opened. And then, of course, that would be above the lower first, which gives me the bias that it would go test the basis. Lower first is currently coming in around 424. That is going to move down if SPY closes below it. But that will also, any closers above there that also can put in a low or in lower term timeframes, at least past 426. Then I'm looking for a basis band tap at around 428 to 430, possibly even up here to this overhead resistance at 431.73 to 432. So that's kind of my take on SPY right now. Again, we are seeing a lower second standard deviation tap, and caution. Got to exercise caution here because this is expansion on the weekly. And when traditional markets, they typically grind up against the upper and lower second standard deviations and then kind of maybe get a close or two through them. It's pretty rare. But in this case, we did see a close slightly below, kicking off a little bit more aggressive expansion, 22 over 20. It's not really aggressive. Could just start a range, which means that we'd have expansive Bollinger Bands, lower second standard deviation and upper second standard deviation expanding away from the basis. And in this case, lower second is 419. So, closing below that prior wick low at 420 on the daily, going to give us the indication that it does want to test down further to, 415, 410, maybe even 400 over time. And of course, 400, 412, 410, 412 is this high over here. And then we've got 406 on this high over here. And then we've got the lower high over here at 405. So there's a lot of support down there. And realistically, getting into the 400s, you're looking at like the midline of this range that was built off the lows. So I'm not necessarily looking for a nuke, but there's a lot of talk about it, so it must be happening and it must happen, right? The weekly is telling me that it's closer to an actual weekly bottom, being by that lower second standard deviation. Doesn't mean it can't test down further, but you can see that Stoke is almost all the way oversold. Yes, it can stay down here for an extended period of time, but the pivot's fairly close and it's trading around the pivot. So unless it drops this pivot aggressively by Friday, at 424, we're likely to start seeing this, turn back to the upside coming into the end of the month here in October and start of November. Not a guarantee. And that also doesn't rule out that it's going to continue testing down further. But it's more likely to see a weekly bounce than not fairly soon. So just keep that in mind when listening to some of the doom and gloom that is going on in markets in general, typically by people who don't stare at the charts. They're usually fundamental analysis guys. And they're gonna get a lot right and they're gonna get a lot wrong. So and I think that charts are the way to go. You go with what's in front of you, not off of opinion, and the technicals do matter because underlying all of this data is the money. So that is the bulk of our analysis for today. Let's go back to Bitcoin. Let's go to our 15-minute volume map and get that up on screen. And then we're going to build a new one because I had some questions, and they were very good questions earlier today about like the best way. Why is my volume map why doesn't it look like yours? And I'm going to show you why it doesn't look like mine, and it's all in the way that it's constructed. So let's go ahead and turn on. You can see that it's been updated from the low there at 26K to 31,397 now. As it's gone up, every higher volume high that is put in is getting marked. Yellow is the close, white is the wick. So you'll note that we had a close open higher here, but I didn't mark it. Wasn't high volume enough for me to mark it. All right, and you can see that it's also not really acted as much of a support. The primary support after this high was put in came down to this wick, which was a higher volume wick here. So we can see that after breaching 29.4, and this was a daily target that we had 28.6, and this was the big area on the daily. That was the wick high. That needed to be beat to go test 29 to 29.4 to 5. We had our 29 test and then close right here from this volume-based area. And then we came up and we tested 29.4 And of course, that was from this close open up here, and this was a big range up here. So after 29.4, we had $30,000. So a $500 range in terms of volume for what was mapped, and it was the highest volume that we had seen. Not quite visible here. Hold on. You can see it there. It's the highest volume we've seen in a very long time. Wiped out a bunch of shorts and a bunch of open interest here, but it created a $500 range. And when it fell back and got to underneath $28,000, 27,800 or so, we said, all right, we got to keep an eye on $28,000. That's a weekly level. It's also this high over here to the 28.6 high. And we saw that reclaimed, bounced around in there, deviated above a little bit, held those lows very strongly here, and then reclaimed it at 28.6 and immediately went and tested this close open here at 29.4 and then the actual high at 30,000 gets tested here, rejected after putting in a higher high. That of course held price in that little bit of a consolidation range above 29.4. And then once we saw it break out on this candle right here, nice high volume high there at 30,600, also a weekly close. And then another little bit of a close open higher high on pretty high volume at 30,700 to 800. That's a daily close open. And then now we have the 31.4 and 31.250 basically on the close, and then 31.4 on the wick. And it's trying to hold the 30,500 to 800 area. So volume maps, very, 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 very important when you're looking at gauging continuation of a move. So let's build a new one. We're going to use Litecoin in this case to build a new volume map. And we're going to first look at the daily. So because we don't have a previous volume map on here, we look at the daily and we look at what is the trend. So if you like, you can throw on a trend, a swing indicator here. And we can see that we have an overall downtrend from like $100 that was back here in July, right? Over $100. So it spiked over $100 and it's been in a downtrend ever since. Lower highs, lower lows, just about all the way, except for a few spots. This was a bit of a structure break here. You see that higher lows, we took out the higher highs. So this was a shorter term uptrend. And then where was the trend break? Well, the trend broke on this low area right here, and it depends on what you want to mark. I mark typically not the swing lows. I mark the closes. So in this case, this was the close. This was the trend break right here for that move when it came back down. So we had an uptrend. Once this guy was broken up here on a close, then we map this guy as an uptrend. So the criteria would be for this side, we have this higher high, and then we have the close there. So this is all lower highs. And then we have a trend break right here. Once 66.99, so $67 broke, this is now a volume map that will be built to the upside here. And in order to build the next one to the downside, we take the closing low before the break, because that would be your trend change to the downside. This is now a downtrend, and the structure break was there at that 64.80. So then we have one map completely separate for this little uptrend. We have one map completely separate for this downtrend. When this downtrend reverses, that would be a trend break above this close right here. So we start mapping this way. So we have the 63.71 would be the trend break. We saw the wick higher high. Once we see a close above it, we start building the map, which is already somewhat built down. We don't use that map. We build a new one. You just save these maps as older maps in your objects tree, put it in a folder, whatever you'd like. And then once this area is breached on a close, we have an uptrend map from this low to the highs here, right? and on this guy here. So we had realistically, it was more like this. So we didn't have to build a new map for that uptrend. Now the same area, this 6371, you'll notice the reason why I'm doing it like this is because you'll note that this then becomes a very important pivot, right? So we have the wick low here. We have a close open over here, right? It's the same area. It's 6351. This is the low. Once this is breached, we begin building the downtrend map, right? But we have a higher high. No closing higher high, still a downtrend map. Now we can move this area again, and you'll notice it isn't moving much anymore, is it? We have this 6324 is the closing high here, with the wick high way up here at 6633. We're not looking at the wick high, we're looking at the close open. But in this case, we can see that we have breached this close open. We breached that 6324. This was the closing low structure here on the wick, and the high side structure to break that trend. So that was this low that led to the downtrend, and then we have the high side structure on a close that would break the downtrend, and thus we are in a trend transition. So we start mapping for continuation. We're mapping volume for continuation to the upside now from this most recent wick low. I know it gets a little convoluted and complicated, but really all you're doing is you're looking for trend breaks. So what breaks the downtrend? What breaks the uptrend? Mark it. That's going to be the area where you flip your map. If you were mapping a downtrend, you then flip to mapping the uptrend. If you're mapping the uptrend, you then flip to map the downtrend. And you can keep multiple maps on your chart, just save them in different folders so that you can reference them, turn them on and off, and kind of go from there. Now, in this case, we can turn off the swing indicator, and it will be a little bit clearer where that now pivot point has been basically throughout this entire range as well. And we have our own pivot point of around 6325 to 6375 for each trend break that we've seen occur. And because it's a bit messier, you have to do that. So in this case, now in order to break this uptrend, we can't even break it unless we see this downtrend broken, right? In order to break this particular uptrend, so we have a trend break. We broke this downtrend, and now we have a trend break. It's not an uptrend yet. It still has to build trend. The only way that it's not going to be mapped to the upside would be the invalidation criteria, which would be closes back below the low here at $60.20. Or if you'd like, you can take the wick low down here at $59.73 because it has not put in a higher low yet or a lower low. It is simply a trend break. And not only did it get a trend break of this close right here, it also got a trend break of the wick, at least as it stands right now. We got to see where it closes by end of day today. All right. So when looking at all of that, the map that we need to build is going to be from the most recent low because we have that trend break. Got that downtrend break. Happened right here on this close open. For the purposes of building the map, we are going to build from this wick low. So we can just right off the bat mark this wick low. We're not even going to reference the volume just yet. And because it is a wick, we will mark it in white. And we will mark the close in yellow. All right, so that's the swing low. Now we drop down to a 15-minute chart and we chart the highs, each high on the way up on higher volume. Or if you'd like, you can do just the swings. I would advise you to mark the highest volume highs. All right, so we've got this wick high in relation to the previous highs. Now, because you already have the data for this putting in a higher low over here, be careful. We're not marking lows, we're marking highs. So if we don't have a reference point for a high here, we have to look here. We see that this is the highest volume candle right here before that high volume low. We're only marking highs because this is tracking continuation. So In this case, we have higher volume lows on the lower low. We saw that it put in the swing and reclaimed this high volume low down here. We're not marking any of this. It put in a high, but it was on very low volume. Now, you can mark this high, but it's not relevant for the particular move until we get to this spike in volume, which, to be fair, I will be fair actually with this one, because this was higher volume and so was this in relation to what was going on. So we can mark that high. We will end up marking that high because it is Coinbase. You're not going to see the big volume bars that we saw before. And then we can mark just wherever the closing high is, and we'll put that in yellow. Now the next big high volume area, so we got low volume in the consolidation, then we got a high volume spike right here. We can, we'll take the close on it, and then we will mark the wick. And you'll note that when this wick high, and you can take wick high to close there, which was $60.80 to $61. When that wick high was hit or retested, that's where we saw a lot of volume coming in. So bulls picked it up because we're looking for continuation. We're looking for closes above. We got to close above the wick high or right on it, and then a close open above it, and then a move up, and then a retest. Higher volume, we're not marking the lows because it is an uptrend, and a trend reversal, we're marking the highs. So this was the highest volume wick high that we had seen prior to that. So you got this wick high over here, and then we get a nice higher volume wick high up here. So we're going to mark the close open of those two candles, even though there is a bit of a gap there. That's fine. We'll just take the bear candle open. Okay, and now we've got a new area to watch. We got this wick high, got picked up, continued right back to this open on the close open high, and then we see it reject, comes back down, finds some support. You're saying, well, why didn't you mark this wick high? It's just not high enough volume for me. If it is for you, mark it. That's a bear candle. You can argue that it's high enough volume, so you can mark it if you like. We'll mark the close. As you can see that it did hold price up, so you technically would be right to mark it. No issue there. I didn't mark it, and in fact, I'm going to go with against what I just said and actually mark it because it's about equal in volume to this wick high's volume. So we got the bear wick high. We're not just marking green candles. They can be bear candles. We're just looking for the high. After testing that low, get a nice bit of volume, come up, retest this area, reclaim the close open up here. After it reclaimed this close open and wick, tests, find support, closes above this close open. Now it's playing in this range. So then it moves up to 61.97. Once we see that get taken, we can now, move our criteria up. Now, because we had a higher volume candle within a close and a wick high, I don't bother marking those because it's between the close and wick high. This high volume candle is not going to get marked because it's already within a marked zone. It is not a newly marked zone. We don't need to newly mark that zone. We just look for the breakout above and or below that close or the wick high. We got the wick high breakout above. We get nice high volume right here. Oh, but you got high volume on the low. Not worried about it. We're looking for the highs. I'm going to reiterate that every time because I've been seeing charts that you guys send me that are always marking the lows within those ranges rather. English not working well for me today. So now we have a bigger range. Yes, the lows got picked up here. And actually, no, you know what? Now that I look at it, this was actually just the highs up here anyway. So, but we did have a bigger range after this rejection on higher volume. Comes back down, finds its footing, and bases around this wick high to close open area. It does give it a swing. So we can mark that one as well. And you can see I'm just being methodical about marking this. And what's the purpose? It's for continuation and mean reversion. So you break out above one of these higher volume areas, you're going to get continuation in the direction of the breakout. And then when you mean revert to these areas, you are likely going to see support come in. So, and then in this case, massive amount of volume up here. We will mark that. And of course, because I keep flip-flopping the colors, they're going to come out wrong every time. And you can see that this then was retested on some higher volume on a low, and even deviated a little bit here before continuation. Now, this particular high was a low volume high that was put in. And this did form a consolidation. So you have to make an executive decision here. It wasn't necessarily a high volume high, but because it did create a swing point, and the lows on volume held up. So the higher volume highs held up the lows, rather. That's what I meant to say. Now, that's where you can make an executive decision. In relation to the previous volume that we even have marked, this is higher volume. So it's not the highest volume, but it is higher volume. So in this case, I'll mark the closing high to the wick. Man, I'm just going to... I wish there was just a better way to do that, but there's not. So now we have a bigger range forming between 63.18 on the lows here and a little bit of a swing wick high at 64.14 to 64.32. We see that there is higher volume in between this area, but because again it's between the the support here and the overhead resistance that we've seen to that point, we don't need to mark it. If you want to temporarily mark it, you can, but it's just giving you the bias to look towards the areas that you have marked above or below. And in this case, we see a perfect retest, by the way, back here to this high volume high right there. But we did get higher volume on this high put in here. And because it encompasses other areas of high volume on this particular consolidation, that's the one to mark, and it happens to be the highest. So we're going to come in here, mark that close open, and mark the wick. So you're just being methodical, and you notice that I'm keep referring to it. Do not mark the lows. We're marking for continuation and mean reversion to support after a breakout. So this is one of the key ways to, now don't confuse a volume map either with your regular support and resistance charts. For instance, you'll see that I have support and resistance mapped out on the weekly time frames and the daily, even on my Bitcoin in 60 seconds chart. This is not, don't get this confused with those other charts that you're creating, which is, primary support and resistances and swing fail areas or order blocks or whatever you want to do. I keep them completely separate. So this is the daily, weekly, and monthly support and resistance chart, right? You're going to have areas that match up, but this is a completely different chart than my volume-based charts. And when we come over here to this, if you're mapping out higher time frame support and resistance, usually I will just turn on high volume, the volume-based chart as it relates to that chart, and then turn that one off, flip it on and off, hide it, or whatever I need to do. So in this case, we have a few more spots of higher volume to mark, higher volume on the high. We even had another high put in there in between the close open and the high there. So we can mark those. That's weird, but okay. I guess we'll mark that in blue temporarily. Come back here, hit that open, and you'll see rejection. We had the spike down into the 63, 17, 18 area. Reclaim, spikes up, makes a higher high on a close open here. gets back, finds support at 65.18, tries that area again, falls through, and then comes right back down where? To some of those higher volume areas in between. Comes right back up, tests, gets above, makes a higher high. We see that that higher high is coming in on decent volume up here. And we can just mark that one on the close open to the wick. And you'll see that it is defining even the current move. The higher volume spike low was in between areas that were already mapped. So not too concerned about that. You're going to hear like, oh, well, I want to mark this one because this area here was higher volume. It actually wasn't. It was on this spike low right here that was in between the zones, and then it came down and tested the next area anyway. Right now we have a higher volume spike low. It's in between the zones, not worth checking. Now what you'll do is as price develops and you've gotten this far to current price action is as the wick highs above an area that's already mapped are created on higher volume, you mark them. So above 67.37, you're going to see continuation to the upside. And as long as it is above, you know, the close open here at 66.66 to 66.85, it's got a higher percentage chance of testing this current wick high at 67.37 and continuing. If it starts to lose 66.66, then we look to the next wick high area here at around 66.35 to the close open here at 65.58, where this last low came in. So that is now going to get saved into a folder, right? So we've got our volume map for this uptrend, and we only started mapping it once we got the trend break at 63.25. Okay. Now that's kind of a callback to when we first started looking at this chart. And now that we have the volume map, we can take all these horizontals, we put them in a folder, and we label this from the low wick because it is a move mapping up. So we're going to map from the low to the high, and we'll just update the high number as it continues to make higher highs, if it continues to make higher highs. So 59.73 through the current wick high at 67.37, which quite frankly, it looks like it's trying to break out of right now. Okay. That is its own volume map, separate from all the rest. And I would be doing this for, you know, this move down until the trend break happened here at 63 on a daily close at 63, whatever it was. 60, maybe it's 64.25. I don't recall. Maybe it was 63, 64. Either way, then I'd be working off of the downtrending volume map, which would be high to low mapped. And there will be crossover, right? Until the trend break. And then you shift and you start mapping the highs. So I'd be mapping all the lows. And then now we've shifted to mapping all the highs, and they are their own maps. And then you have your regular support and resistance. You know, we've got our monthlies. And those would all be different as well. You know, they're just different objects in your object tree for your chart. So we've got the monthly lows. We've got close open order blocks you could mark. We got the monthly highs, horizontal support and resistance. You could do your dailies. They're just going to be a separate view of the chart versus that volume map because you have a specific thing that you are looking for when looking at that volume map. And it's simply tracking continuation and mean reversion to support. And once we see a higher low put in on this particular trend, because it is a trend break, if we see a higher low put in, then we're starting to see an uptrend form, especially above the most recent higher high, and it will almost always fall back into your volume map that you just created. So, I mean, it should fall back into your volume map that you created because you're going to continue to track the highs. So it's always going to fall back into it, most likely to the highest volume areas that you have marked. All right. Yes, I can go back and I can show you. Just the full map. Yes. Yeah, so for those that in the other stream, you guys are basically hearing me right as I'm talking about it. There's others that are delayed. But yeah, this is the volume map. And you're just mapping out all those higher volume highs on the move up, and you get a very structured look at continuation and mean reversion to support. And until we see a daily higher low put in and or lower low, which would have to take out the lows down here, we're looking for it to continue up and then come back down into the volume map and either create a lower high or a higher high. Sound good? Cool. Awesome. All right. So now that I got that out of the way, I hope that made sense. If it didn't, you're going to have to let me know, and we'll just continue to, I'll continue to revise the way that I talk about it, build them, and give examples for them. So just go ahead and give me your feedback on it, and I will continue to find new ways to illustrate it and or go through the exercise more and more so that you get it locked in. Cool. For right now, we are going to turn on some music again. And I'm going to take a look at the chats. Yep. Oh, that's not working. All right, hold on. Sorry. All right, so some music to cover. And let me go ahead and look at the chats here. All right. Yeah, for you guys that are over there in the other streams, I'm going to focus more on the people in YouTube if there's any questions there, because we have a conference call a little bit later. Yeah. So you can ask me any kind of these questions are fine there too. Yes, you've got more going on board for the 2457 FINRA certifications. Awesome. Very good. Very good. You guys are churning them out over there. Yep. Okay, cool. Let's go ahead and look at what's going on over here in... Hello, Edward. Jedi. Cheryl. Hello. What else do we got here? Bobby. Hello. Sam. Hello. How is everybody today? Glad to see everybody hanging out here. For those of you that are watching but not in the chat there, if you hit subscribe, you're more than welcome to come in and chat with me for a few moments. I'm not actually going to look at too many alts today. I might look at maybe one or two of the bigger ones, but yeah, not going to be doing too much more. I've got some things to take care of, as I kind of alluded to just a moment ago. Looking to do a bit of a conference call here in a bit. All right, so Edward, thank you for letting me know you could hear me. I did see that. I was just kind of already talking through it by the time you had typed it. Jedi late. Cheryl saying hi. Let's see. Jedi's talking about TradingView stuff. You don't really care about Wyckoff because A and B just don't look similar, but they start as one and become the other. Wyckoff's important to understand, to at least be aware of the schematic. It does matter. If you see a very clear Wyckoff schematic playing out and the criteria matches, it's not always going to be the same. There is quite a bit of variance in terms of time frame, but volume is a little bit more important in my opinion. Let's see. Cheryl says she loves the Landy bands and she agrees Wyckoff does have merit. Yep. It does. Look, I'm not gonna, I'll tell you that the volume signature is not matching currently. one of the main reasons that you're hearing a lot about it is because traditional markets look like they're in a distribution as well. Again, volume doesn't quite match. It doesn't mean that it's going to match, and it can still not match and turn out to be a distribution. Just be aware of that. Do I personally think that's what we're looking at? Nah, not really. To be quite honest, let's get down on the degen chart here as Bitcoin continues to push around the highs. You can note here that the volume map on the high here, it went back and poked at that wick high and immediately started to pull back. That 31, what was the wick high now? 31, 396.98. So right below our 31, 397.56. So yeah, volume maps very important. Don't confuse them with traditional support and resistance. You're going to use them. They're separate tools. One is gauging continuation, and yeah, cool. All right, so let's see. Thank you. Cheryl says hit the likes. Yeah, I appreciate it if you do. Jedi said he's going to review this stuff later. Bobby wanted to look at S coins. Oh god, oh Naka. Yeah, Naka's been going pretty good, I've heard. Yeah, it's been in a pretty strong it's had a pretty strong chart for a little while from what I've heard. Sam's just saying hello, and then Bobby said never mind. What I will do is I will follow up with a few extras here for you guys at the end. We're going to go ahead and take a look at Bitcoin dominance real quick. Look, there's going to be a few alts that are flying and outperforming Bitcoin right now, and it's going to ebb and flow throughout the day. Bitcoin went up over the weekend and was the leader of this party. There's some that are like, no, Link led. Well, Link was in a manner of speaking, it was kind of leading. So we can actually look at Link because not on that damn chart. Holy crap! At least use a chart that's got candles on it that aren't all over the place. This could be a higher time frame breakout. It is actually on the weekly, yeah. So it closed above 966. Now we had previously mapped out. I don't know. It was over here that we were mapping this for different purposes. I don't even remember when we were looking at this chart, but this is a long consolidation on Link. And when did this start? Yeah, so May of 2022. Yeah, we're looking at a really long consolidation on Link. Stuck sideways in the range, finally pops out. Breakout traders might get screwed, to be quite honest, on the daily. But you know what? But maybe not. You can see that daily higher volume, higher high once it was breached. Boom, and we're getting lower high on that breach as well. Although consecutive bars, I would look for a possible retest. Did it get to the wick high at 1143? No, where did it get to? It got to 1105. So, from the daily perspective and even the weekly perspective, we can just pull out and look at the weekly here. It's trading above and breaking above this primary low that was really holding things down here at 939 on a close. And now that it has recovered that, the next big areas to look for are the next closing lows. So we've got a closing low up here to the wick lows. So we've got this wick low here, and we can do this the same way. We're not mapping volume, but we can clicked on the wrong thing. So we can map these guys as again, close is yellow here, and the wick is white in this case. When looking at this wick, there's a close right above it at 1270, and then the next big close is going to actually be this high here at 1450 to the close open at 1530 or so. So yes, it's a mess of lines, but the main reason that I want to point this out is, yes, there's a nice breakout here on a closing basis from the lows here, and it could rip higher. You do want to be cautious around some of these bigger zones though, and if you want to clean this up, to be fair, you can, and you can just go to the monthly. So it's approaching some pretty big areas. It's breaching this big old monthly order block that has kind of defined these areas here. So you got this monthly order block area to this high on the monthly. It's kind of a closing consolidation. We have the low wick back here of this consolidation and then move up. So the next big area is, you have around 15.5 from the monthly perspective, provided it can close above the wicks. But I want you to note the close open of the breakdown. Just like on Bitcoin, it has spiked the close open of the breakdown at 1097 and a little bit above, right? So this is the area to look for a reclaim from the monthly perspective. 1097 to 1228. You can also see that would put it above this little order block right here, and still inside of this order block over here on the monthly. And then it's up to the next order block area, which is basically a breakdown. To be quite honest, like, this link chart, not bad, man. Like, when this thing fires off, especially above like 1950, hold on to your pants, because this thing's probably gonna moon pretty hard. But I would exercise caution between the basically like 1050 to what's it trading at? We can call it 10, where it's currently trading now. You can take maybe the wick highs of this consolidation on the daily at like 975 or whatever. Between there and like 12 to 1250, just be careful. I see a comment says that's a big ass bull flag. Yeah, it's not really painting a flags type pattern, it's painting a consolidation. But yeah, I mean, you could make an argument that it is a bull flag, and you could pull some pretty crazy targets from that as well. But if you look at it on on linear, it's not a flag. It is on log, but not on linear. It's a markup consolidation. On the 3-month, well, if you're in log, yeah, I mean, it's just a consolidation. If you're in log though, it is going to look flaggy. I wouldn't run it that way though. Just my advice to you. What I will tell you is though, if you want to measure it, you can just use log scale if you want to measure it as a flag. And you're going to get some pretty crazy targets, I suspect. So like, if you're going to run it as a flag, make sure you switch it to log once you get it. And you're going to get some targets, my friend. $50, 50% fibs coming in at 102, 618's coming in at 211, 786 at 592, at 888 up there at 1100, and 100% of this is $2,200. Can it get there? Sure. Is that my first take on it? I mean, once Bitcoin starts breaking highs, Link is looking very strong. It is the oracle of everything, so it could rip faces, but it's not my first take on it. One step at a time. It's trading at $10. let's go look at the bonus here, which is Bitcoin dominance. You will see USD pairs running. You will see some alts running with the Bitcoin, and maybe even further than Bitcoin. But by and large, Bitcoin is killing alts right now, and it will most likely, if it can reclaim this close open up here, which, you know, it's kind of here or there whether or not you want to do pure TA on dominance, but I've never had a problem with it. In this case, 5320 would get some nice continuation. Right now, you know, this is a consolidation breakout. We had marked this wick high as defining the consolidation way back here, and it, you know, at 48.92 to 49%, and you know, it's broken now. And if this monthly closes on a higher low like this, above 52, of course it's got to be a meme number, 52.69. You know, we're just looking at one area to get taken out, and that's 53.20, and then it's looking right to the next big area there at 58 to 60%, man. Like, a lot of alts are still going to run in USD, but they're going to get crushed on their BTC pairs, and that's when you should really be buying them, is when they're getting crushed on their BTC pairs, not when they're not necessarily, unless you've been buying right along. The real trade is when they're getting crushed on their BTC pairs, and then, you know, dominance is about ready to keel over on Bitcoin, and then you get the alt season. That way you're not holding garbage and have money tied up in it for extended periods of time, unless that was your plan and you were sweeping the lows on things like Link when it made the lower lows and stuff like that, or Litecoin when it went back and retested its pretty major low area and might possibly be putting in a longer term macro low. Never know. Of course, Litecoin doesn't like to make higher highs, so there is that. But, you know, to each their own when it comes to that stuff. But I will tell you that my strategy for trading alts is typically let Bitcoin dominance run for a while, let them BTC pairs get crushed, and then start taking and sweeping the floor. You know, even if they're a little bit higher valued on their USD pairs, I'm okay with it, as long as the trade is more advantageous and it's in the direction that I'm trying to trade it in that long direction, and I'm not sitting through very long periods of consolidation, unless it's something that I'm, you know, been building out for a very long time on the lows. Yeah, and then I'll probably check on Sol here before I go, and then I'm gonna head out. Let's see, Sol looked, that's not it. There's Sol. Where was I mapping this for? I believe Cheryl's the one that typically asks about this on YouTube. Were we mapping this on Binance? Yeah. Well, no. Maybe. Yeah, because we did kind of map out this higher low structure on the daily. So yeah, I mean, it's looking pretty good. I think we were looking for something down here, and then it bounced off, and then it was about the retest at that 17. I think that's what we were plotting on the last time that I actually looked at this. This might not even be the right chart, but Sol has a little bit of work to do. It's got to break that wick high at 32.30, and you know, a daily reclaim of this range here would give us the bias that 35 to 40 is on the table here, this consolidation zone up here. Yeah, 40, possibly even more, if it can start breaching this 32 wick high, 32.30. Yeah, above there, it looks pretty damn good. Nice expansion, compression to expansion. It's looking like it wants to take this out. Or at least at minimum run that 3230 high. And that's only from, that was fairly recent, right? Yeah, it was July. It was over the summer. So it's looking, this is a nice compression to expansion on the Bollinger Bands. One thing I will caution is it's at 96 over 82, and at close today it's likely to be at 100. So, you know, if it fails to actually close above that high, then I would look for some mean reversion. Now, somewhere back to a base of like $25 to this last high at 23.84. Be aware of the wick low though. This was a little bit of a extended move off of that basis band, and you don't want to see closes below 23.10. Otherwise, it's like right back to the lower first there at 21.46, $21 or so on the low. Yeah, the low was $21, in fact. So, yeah, looks good. Looks good. Momentum's pivoted at 27.72. So just watch. This is still gonna have room to go run that high. But if you see just a swing of it, that 32.30, and it fails to like close and reclaim, especially, you know, like initially, I would look for, you know, pullback or consolidation. And then that's where I'd be looking somewhere around $25 or so, and then below there, back to this base around that 21 to 24, 25. Other than that, you know, if it does high level consolidation, you're going to see it like in the 26 to 27 area. You know, these two highs here. Well, technically that's 25 as well. So probably around, you know, 26 to 27 and a half. That'd be higher level consolidation. And the reason why I'm saying 26 or so is the upper first standard deviation is currently there, and it's going to move up to 27. It can deviate down below in the lower term timeframes, but if it's going to consolidate, you know, look for this thing to just try to melt up through that 32.30 area. The weekly probably looking pretty good. That is the upper second standard deviation at 29.61. It's currently trading above there, and it got a close above it as well. So, you know, this is still pushing the weekly upper third at 32.30. So you want to see a strong weekly closure with aggressive expansion if it's going to get continuation of a breakout. Looks good though. Weekly's turned up $20.76. So basically the last higher low here on the weekly at $21. Above there looks good to keep trying higher. Next big area, it's already reclaimed the low. Next big area is like 38 to $40, to be honest. Might want to pay attention to this low though at $30.55. Defining this range over here on a close, because that's the area that it needs to push through, plus the local high. Then we're looking at these wick highs and higher. Yeah, it's already above this low. It's already above this low. Yeah. So above 29. I'm sorry. Above $30 basically. What is this measuring? Oh, that's the price is trading right on it, so it was messing me up. Sorry. You can even take this open here because it's a little bit more generous. $30.41 to $32.30 is what you need to pay attention to, and then of course 21 to the downside there to 25. Looks good though. How's the monthly doing? Monthly basis bands at 33.75, so beware. Again, that's right in that zone overhead. Jeez, above 11.06 on the monthly, it's looking fine. Looks good. Looks good. If Bitcoin really starts ripping, this is just gonna follow, as alts typically do. Looks very good. Like this structure as well. Reversal off the lows, upper second area. Come back to the basis band. Impulse through the upper second and third, back to the basis band, Tap on the upper second, get a little compression, hold the basis. Boom, up, perfect. Perfect, perfect, perfect. Now, just note, it's got to take out the downtrend. This prior downtrend, as long as it takes that out, then you can start looking to, you know, the deeper 35 to 38 area, possibly $40. All right, I think that's going to do it for today. I've got to start getting ready for this call and go from there. You guys have a wonderful morning, afternoon, and evening. No matter where you are in the world, please trade safe. And of course, as always, stay safe. And with all of that being said, Landy out.